FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And now we have John Rubino with us of dollarcollapse.com. And first, we're talking about Europe is tanking, so therefore QE must be coming. And John, welcome back.
Hey, Kerry. Good to talk to you again.
Yeah, so Germany, the engine of growth in Europe, is sputtering. And that means if we don't have some major money printing in Europe shortly, because I don't think the Federal Reserve is going to open its checkbook to all of the European banks once again to save them from imminent disaster. These banks are going to seize up, right?
Yeah. Europe was really the economic story of the previous week, leaving aside all the geopolitical stuff going on out there. Basically, the big European countries are reporting flat to no growth now. In other words, they're tipping back into recession, and that's huge for over-indebted societies. You know, zero growth is not stability. If you've got too much debt to begin with and are piling up more and more debt all the time, it's death. You know, you have to grow at a rate that exceeds the amount of new debt you're taking on, or else you dig yourself into a deeper and deeper hole, and eventually your society just ceases to exist in its current form. You have a huge debt crisis, and that's what Europe appears to be heading for now. And you're seeing headlines everywhere. I list on the last article I wrote about it. I list a lot of the headlines that have shown up in the dollarcollapse.com breaking news section, and it's one news outlet after another pointing out that Europe is dead in the water and predicting some kind of doom and gloom. So the mainstream mindset is shifting to very pessimistic on Europe, and how we got here is an interesting story because Europe was in serious crisis 2 or 3 years ago. And then the head of the European Central Bank, Mario Draghi, said that his bank would do anything it took to keep the eurozone system from imploding. And that basically calmed the markets down. Everybody thought, okay, well, the ECB's on it. We've got adult supervision. We've got liquidity when we need it. Things will be okay. And so European bond yields went down, and it appeared that the eurozone economies began to grow again. But what actually happened was Draghi was job owning. You know, he was talking a good game, but he wasn't actually doing anything from the standpoint of actually flooding the system with liquidity like the U.S. and Japan were doing. The European Central Bank actually took euros off the market in the past few years. And that naturally leads to a stronger currency. You know, lower demand leads to a higher price. So the euro went up over the last couple of years, and that caused European exports to be more expensive around the world and slowed down European export growth and the various economies that depend on exports within the eurozone. And so it caused European growth to basically flatline. So now what has to happen is the European Central Bank has got to get on the QE bandwagon. You know, you cannot have Europe slip back into a recession right now with all the debt that they have and with all the new debt that they're taking on. You would have a huge financial crisis in Europe if that happened. So the European Central Bank has no choice but to do something to liquefy the system. So more than likely, they will do some kind of quantitative easing in which they buy back the bonds of Spain and France and Portugal and everybody else with newly created euros. And they might call it something other than QE, but it'll be similar to what we've done and what Japan has done. And then that'll shift the focus back to the US and Japan. If it makes the euro go down, which is their goal and which has been happening lately, you know, the euro has been tanking in the last few months, beginning in May. It looks like it's down 5 or 6%. And that will, in effect, cause the dollar and the yen to be stronger. So a year from now, the roles might be reversed. You know, Europe might seem like it got past its crisis while the US and Japan are dipping back into recession because our currencies went up too much. And, you know, this is just a kind of a game of musical chairs where one country lowers the value of its currency and that hurts its trading partners who then respond in kind. And, you know, it's called competitive devaluation. back in the Great Depression, it was called beggar thy neighbor. And it never works in the end, because by depreciating currencies against each other, we just hurt each other. It's just a zero-sum game where somebody's up and somebody's down at any given time. And then the guys who are down have to respond. And it goes on in kind of a race to the bottom in currency values. So what Jim Rickards says in his latest book, and I agree with this, is that at some point, all of these countries will figure out that the one thing they can all devalue against is gold. So we'll have a monetary reset where everything is devalued versus gold. And we start defining our currencies in terms of gold again at maybe $10,000 an ounce gold, and which is a massive, massive inflation across the board. In other words, in dollar terms, everything will get more expensive. Bread will be $7 or $10 a loaf, and gasoline will be $15 a gallon. And so everybody's savings will be impaired. But the debts that we've taken on will be easier to manage in those terms because we'll be paying them back in cheaper currency. And then assuming that we impose some kind of a mechanism that keeps the government from just starting to blow bubbles again, and from that level, we'll have stable, solid currencies going forward for a while until they figure out a way around the latest set of rules. But that appears to be what's coming at some point out there in the future. And when it does, it's terrible for people who have dollar savings and good for people who have precious metals and other real assets. So that's the investment thesis that flows from today's eurozone problems. And it looks like it's kind of baked in the cake. There really aren't any other ways for us to go if we want to survive in our current form, because we've taken on so much debt that we can't grow. And the only solution to an over-indebted country that can't grow because of its debts is to devalue its currency. So some way, somehow, we have to do that.
Mm-hmm. So, but he's been saying this for a while, but this is the last resort, isn't it?
Well, this has gone on longer than just about anybody who has been watching with a sound money perspective for years and years. And so that means it could go on longer than we think it can from here. But at some point, this has to happen. And it comes down to when people finally figure out that this is the game. That even if your currency seems quote unquote strong right now, it's actually not, because its current strength is going to lead to weakness in the future. And so we realize that it's government policy to devalue the currency on an ongoing basis, and then we act accordingly by shifting all our money into hard assets. So that day's coming, and it's just a matter of enough people figuring it out to affect the markets. So can't say when it's going to happen, but it's almost certain at this point.
Mm-hmm. So, and really, it's not just an East-West thing either, because China's in the same boat. Their credit markets are seizing up right now. So they're either going to go back to inflating, or they're going to have a massive deflationary crash, similar to what the U.S. had in 1929, right?
Yeah. China, unbeknownst to most people in the global financial system, was basically the engine of the recovery starting in 2008. Because they borrowed something like $15 trillion. Nobody knows for sure because they don't really report their numbers, and they've got all these non-bank banks running around out there lending money and doing other things. But it was something like $15 trillion, which is as big as the U.S. banking system. So that's a huge number for an economy like China. And they bought all kinds of natural resources and built all kinds of infrastructure with that money. And now they've got all these debts, and the infrastructure they built really isn't as profitable as they thought it was going to be. And ghost cities, airports with no planes flying in and out, malls that are completely empty. And so they are having a cash crunch right now, and will probably have to liquefy their system, create a lot of new yuan and dump it into the banking system in order to stop a lot of these big builders and regional governments from going bankrupt. So yeah, they're in the same boat. Everybody's in the same boat, basically. There are very few countries that aren't grossly over-indebted right now, and who are therefore faced with the really stark choice when you borrow too much money, which is to collapse under the weight of your debt or inflate your way out of it. And so everybody's trying to inflate their way out of it. And again, the only solution is some kind of coordinated inflation instead of this back and forth thing where we devalue versus each other's currencies and then have to repeat the cycle again when the bad results of that hit home. So it's coming. China's involved in it, or will have to be involved in it. Japan, obviously, is the most indebted at the government level of any of us. And the U.S. is a mess. Europe's a mess. So, it's going to happen. And it's just a question of when.
And my question is, what is going to happen to Bitcoin through all of this? Because Bitcoin's only got a maximum of 20 million currency units that can be issued. Right now, as we speak, and by the way, we'll be starting a Bitcoin website and podcast, weekly podcast. Right now, Bitcoin is deflating a bit. It's down to 463.82 in US dollars. But more on that when we return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every day, the Financial Survival Network reaches tens of thousands of listeners and would like to reach thousands more. By adding a video channel and more show hosts, we think we can make that happen. But we need your help. If you're a regular listener of FSN and would like to help, please go to clubfsn.com to donate monthly from $1 to $100. The choice is yours, but every bit counts. There are premiums available for you, but the biggest one by far is you helping FSN get the message out to your friends and family to be prepared, hopeful, and ready. That's what FSN is all about, and that's why you listen. So go to clubfsn.com and help us get the word out before it's too late.
The Financial Survival Network. It's all about what's next.
We're back with John Rubino of dollarcollapse.com. So Bitcoin could theoretically be a major winner in this whole reset as well, right, John?
Yeah, Bitcoin is a technical issue as well as an economic issue because as it's set up, has a very limited supply that grows in a predictable way. And that's the definition of a strong currency right there. If you know what the supply is going to be going forward and it's going to grow modestly, then it should hold its value. But there are other technical issues with Bitcoin, which I don't understand. What are the roles of hackers in online Bitcoin accounts? What will the NSA do when and if Bitcoin becomes an actual threat to the world's fiat currencies? How are governments going to react to that? Will they try to regulate it out of existence? Will they try to hack the major Bitcoin banks out there and empty them out and in that way destroy confidence in Bitcoin? I don't know. And I'm not technically qualified to say. So I think cryptocurrencies are a fascinating subject. And I think they definitely have a role to play theoretically in the global economy. And the world would be a better place, frankly, if those were the currencies we used for exchange. You store your gold as your basic savings, and then you use something like Bitcoin in place of dollars to do your transactions. That would be a more rational world than paying Visa and MasterCard to allow you to exchange fiat currencies that are being actively depreciated by their governments. What we have now is an unsustainable, some would say insane system, and one that had Bitcoin as its main transaction mechanism would be a lot saner, I think.
Yeah, and there was a great article on this very topic of a guy. He's in China. He's getting paid in yuan. He doesn't trust yuan in the least. And what is he doing? He gets his pay in yuan. He immediately buys Bitcoin for free, because there's no conversion penalty. There's no conversion commission, because normally when you convert from one currency to the other, there's a bankster-esque entity hitting you for 2%. So he converts from yuan or renminbi to Bitcoin, and then from Bitcoin to HK dollars, because evidently he's from Hong Kong or he's got a connection there and he feels more secure about HK dollars than he does about yuan for whatever reason, and he knows better. I'm not going to question his judgment there. And then he does all this in an instant, in the blink of an eye, and he saved 2 conversions. Well, he basically saved 2%, and it could be even more than that. And he's out of yuan into HK dollars, and everybody's happy, except I guess the PRC, because, he's fled. It's effectively small flight capital. It might only be a couple $1,000s. He hasn't paid anything. and boom, he's out of it. I mean, how good is that?
Yeah. And as Bitcoin gets easier to use, people have sent me some examples of Bitcoin wallets and payment systems out there that look pretty straightforward. You make a wire transfer or whatever and of dollars into the account, and you're there. You can start using Bitcoins for transactions. So as it gets easier to do, more and more people will do it. And I think that's a good thing. I think that to the extent that you can transact using something other than a national fiat currency, that you're making a wise financial move. And what people should be wary of with cryptocurrencies is that they should understand the difference between money and currency. I know there's some debate about whether Bitcoin is actually money. In other words, something that you can store and expect it to maintain its value over long periods of time. But I would say right now, as Bitcoin is used, in a online wallet, for instance, rather than in some kind of physical reality that you store in a safe deposit box or whatever. Bitcoin is a currency. It's something you use for transactions. And gold and silver are money. They're physical things that you keep in a place where you can keep track of it. And so you don't have the risk that like Mt. Gox, the big Bitcoin wallet, folding the way it did and everybody losing their accounts. You don't have that risk with something that you hold that has a physical reality. So that's where your risk-free savings goes into gold and silver held in a safe place. And then your transaction accounts, where you have, for instance, currently a bank checking account. That is what you move into a Bitcoin account and use it to buy and sell. You don't hold that for a long time. You don't hold a ton of money in those accounts. But you hold as much as you need to pay your bills and buy the stuff that you want to buy and transfer money around, whatever. And so that differentiation, as long as people understand the difference between those two concepts, money and currency, then the trend toward Bitcoin is very healthy, I think.
Yeah. I mean, it's not a store of value. It's a medium of exchange.
Yeah. Now, see, there are Bitcoin people who say that it is because you can print Bitcoin out on a piece of paper, and that code becomes the only version of those Bitcoins in existence, and so you can store it in a safe place. But I don't think very many people do that yet. Most Bitcoins are held online somehow, or on a computer hard drive, and those things, they're at risk because of that.
Yeah, you can back them up supposedly, but there's issues for sure, and but it's a currency, and currencies are not money. So I would argue that it's not a store of value because it has no intrinsic value, right? I mean, it just doesn't. So, it defies one of the basic definitions of money, which is store of value, portability. Yeah, I guess it is portable. It is divisible, but durability, that kind of goes with store of value. And durability, that's an issue because it's only as durable as your device you're holding it on or the piece of paper you printed it on. All the, let's face it, all the gold that's ever been mined is still in existence in one form or another. So, there are issues, but it's only as durable as the medium that's holding it, not the medium itself, right?
Yeah.
Bitcoin.
Yeah.
So we'll see.
One other thing with Bitcoin is that it's potentially vulnerable to technological progress. In other words, somebody brings out a better version of a cryptocurrency, and then money flows into that out of Bitcoin, then you'd see Bitcoin's value go down, regardless of its supply trend or anything. And that's something that is hard to predict at this point. The original computer makers, for instance, mostly all went bankrupt because Apple and Intel and everybody came along with stuff that was better. And the same thing could theoretically happen to the first generation of cryptocurrencies. So that's another thing to watch out for with Bitcoin. And again, I don't have any kind of technical expertise that would allow me to speculate about what the characteristics of the next generation cryptocurrency would be. But the way technology has gone is that the original pioneers in a field have not been the ones who ended up being the Amazon.coms at the end of the day. They started out, they got famous, they were very hot for a while, and they were supplanted by somebody who had a better idea. And so you want to watch out for that also with any kind of cryptocurrency that you use.
Yeah, technical obsolescence. And really that kind of happened in Europe when they switched to the euro. All of the money that was in circulation, the national currencies, became obsolete because they said you have X amount of time to convert to euros, and after that, your money is worthless. So really, but that was more of a legal obsolescence than a technical obsolescence. But yeah, it's we're in uncharted territories, and you do need to be very wary of it. And there are problems that have yet to be solved with Bitcoin, and we just don't know what's going to happen. So, yep.
But if you've just got your this month's bills, for instance, in a Bitcoin account that you're getting ready to pay, that's no big deal. You can manage that risk very easily.
Yep, you can manage that risk very easily, and So what's going to happen here this week? I mean, we're seeing a lot of stuff going on with Russia here, a lot of saber rattling, Middle East, ISIS. We just have to keep our eyes. All of this should be bullish for gold, but gold, of course, is going down. So makes total sense, right, John?
Yet another completely inexplicable week in the precious metals markets. Because you would think with all the stuff that's going on right now that a lot of money would be flowing into the safest possible assets. You'd think with Russia on the verge of invading Ukraine and Israel doing what it's doing over there, and of course even civil unrest in the U.S. that precious metals would be in more demand right now. But these week-to-week moves are completely inexplicable, and it does look like some of this stuff was getting solved last week. The U.S. has started bombing ISIS, and the Kurds are pushing them back from that dam that was crucial to the whole equation over there, and Israel and Hamas are maintaining their ceasefire. So it could be that the global geopolitical situation is actually calming down a bit, and that's good for equities, bad for precious metals in the short run. But the underlying fundamentals are still phenomenal for hard assets in general and precious metals in particular. So what happens in any given week really doesn't matter. We should be just accumulating a little bit at a time, not jumping in with both feet in any given time for any given reason. But if gold and silver went down a bit this week, then that's a signal to buy some more. And we should just be continuing to do that until everything blows up, until the reset comes. And there might be some ups and downs in between. We could have a deflationary shock originating in Europe, as we talked about earlier, where we have kind of a 2008 style financial market crash because everybody decides that we're actually heading back into recession, and with all these assets priced for protection or perfection, maybe we better sell some stuff and the stock market's tank. That could happen easily. And that might take down precious metals in the short run at the same time. But the world's central banks are going to react just the same way that they did in 2008, 2009. They'll flood the system with new currency, and that'll be great for precious metals. So this is stuff we just have to get through on the way to $5,000 or $10,000 an ounce gold. That's coming out there. We don't know when, but in the meantime, kick back, accumulate slowly, and let these broad forces that are in action now and heading for that point, let them play out.
Yep, exactly. Don't let the day-to-day gyrations of the market drive you crazy or alter your path towards sanity. On that note, find John at dollarcollapse.com and go over to financialsurvivalnetwork.com. Sign up for a newsletter. We'll talk to you next week, John. Be well.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.